Hello, everyone, and welcome back to another episode of Sipping Wealth Live. Today, I am going over the 1031 exchange. I have a lot of questions about this, and with going through the tax season, I've seen a lot of people kind of over like paying huge tax bills, and where they could have just implemented this simple strategy. So, with that being said, for those of you tuned in with me, go ahead and make sure that you are subscribed to the Sipping Wealth YouTube channel, and also that you hit that share button and notification bell so that your friends, families, loved ones are here to wealth up with us, and so you don't miss out on any other episodes of Sipping Wealth Live. Alrighty, y'all. Give me 1 second so we can get started. Okay. All right. So for starters, what exactly is the 1031 exchange? Well, actually, so quick promo. So I published a book called Real Estate Strategy Book, and within this book, I actually list out 8 different huge, great strategies, tax strategies that you can actually utilize if you're investing into real estate, if you own real estate and you want to turn it into investment property. Different strategies that you are able to implement if you own real estate. So I highly recommend, of course, that you purchase that book. You can check it out on YouTube. On Amazon for purchase. Hey, Reggie. Hey. Thanks for joining the live. Oh, I forgot to say, for those of you tuned in, go ahead and say, hey, girl. But thank you for getting us started, Reggie. I appreciate that. All right, y'all. But yes, so go ahead and check out that book. Like I said, it is available on Amazon for purchase. Okay. So, what is the 1031 exchange? Essentially, the 1031 exchange is actually an IRS code. So it's actually section 1031 of the IRS code, Internal Revenue Code. So, and this has to do specifically with deferring taxes within real estate. So instead of taking the tax hit, that year the property is sold, it's essentially kind of rolled over into the next property and then until you eventually sell. So sometimes people are rolling properties for generation to generation. So they actually don't even end up paying taxes on that property or for the gains of that property while they're even alive, because they can't implement this strategy, rent to repeat for this strategy. So this is a huge way to essentially, when y'all keep asking me, oh, what's a way that you can decrease your tax bill? Hey, Marsha, hey. What's a way you could decrease your tax bill, or what's a strategy that the rich employ? This is something that the rich people employ, because essentially what you're saying is, hey, I purchased a property for 250,000. By the time I'm ready to sell, the value of that property doubled. That property is now worth $500,000. Instead of you pocketing that $250,000 in gains, you say, hey, I'm actually going to take that $250,000 in gains and I'm going to purchase another property with that. So now you didn't actually realize the gain because you just rolled it over into another property. So essentially now you don't even have a tax bill on that $250,000. And then you purchase another. Now you're like, okay, I'm going to go purchase a $500,000 property this time around. All right. Now I'm going to do the whole thing again. Now my property is worth $1 million. I'm going to purchase a $2 million property. Now that property is worth $5 million. And you could just keep this going, y'all. So, hold on, before this thing die on me. Ooh. Okay, you could keep rinsing, repeating this strategy. Um, I highly recommend if you are wanting to employ this strategy or if you want to learn more, definitely reach out. But yes, this is huge. So the purpose of, like I said, the 1031 exchange is to defer taxes. So you're not you're not essentially avoiding taxes, you're just deferring the actual tax hit on the capital gains. But like I said before, if you keep this rolling, then you won't even end up ever paying taxes on this because you kept on employing the same strategy, rinse and repeat. So, but it's a tax deferral strategy. Just to keep it straight, this is not for you to avoid taxes, but in a way, silver lining. But yes, okay. So the type of properties that are involved, or certain properties that you can use within this 1031 exchange. And there is actually a 1035 exchange for annuity contracts, different things like that. But we're gonna get into that later. I'm not even going. Okay. Okay, so different properties. It's the caveat with this strategy is you have to use like kind properties, meaning you can't trade a real estate property and say, "Oh, I'm going to go purchase security with it," or "I'm going to go purchase and I'm going to put it into an annuity contract or a life insurance contract or something like that." So it has to be a like kind. It has to be similar. So if you're in real estate, you use the strategy within real estate. It has to be the same. Or like I said, like kind. Those are the exact terminologies they use. All right. The also another caveat with this is timing. Timing is key. Y'all go off and y'all make these huge decisions, and then next thing you know, you're stuck with a huge tax bill, and you're like, "Oh, help me, not pay taxes." What do I do? I just sold my property, and I'm left. I got a check for $200,000, and that was 5 months ago. You already made that decision. And this is the main reason why you don't wait until tax time. You don't just wait until tax time to speak to your accountant. Before you make any financial decision, you want to make sure that you clear with your accountant. You want to make sure you sit down and have that strategy session. You want to make sure, hey, you're about to sell your house. You need to sit down with your accountant. You need to sit down with your financial advisor before you sell a house, purchase any assets, do these major life events, because a lot of these have tax implications, and you want to make sure that you're ahead of it. So timing is a huge thing with employing this tax strategy. So it's critical, critical, critical. You only have 45 days. The investor have 45 days from the sale of the property to identify the property that they want to switch out the original the original property for. So whatever property you sold, you said, okay, I'm selling my property on June 1st. Well, you have until mid-July to identify the other property, or they're going to say, hey, you no longer qualify for this. You can't use this tax strategy. So that's why this is so important to make sure that you speak to your accountant and your financial advisors and everything, your team, before you go and make a huge decision as selling a property or even purchasing. So you want to make sure you have this information ahead of time. So after 45 days, within 45 days of the sale of the original property, you need to identify a potential replacement property. So you have to identify at least three of you can identify three properties. So say you're like, I don't really even know, like 45 days is quick to close on a new property. That is okay. But you need to at least identify properties. You can give them three properties. Hey, these are the three properties that we're looking at, and we want to essentially do the 1031 exchange on these properties. That is fine, as long as you identify your potential property that you're going to replace with the 1031 exchange. Now, within 180 days of the sale of the property, you have to now switch out. They're giving you 180 days to close on that next property. So if you don't close within that 180 days, you're out of the window. Okay. And the IRS is a stickler when it comes to this. Okay, they are a huge stickler with as far as like timing and everything like that, because essentially you are, like I said, you're delaying paying taxes on this. You're essentially avoiding tax payment on that on those capital gains for that year. So you just made 250,000 and gain on that property, and you're saying, "Hey, I'm not paying taxes on this because I'm purchasing another property with that money." So the IRS is like, "Okay, if you want to employ this strategy, you need to be on your P's and Q's." So it is crucial that you do this 45 days to establish the replacement property. Within 180 days, you have to make sure that you are closed and signed, sealed, delivered on that new property. Okay. So, like I said, timing is huge, huge, huge. Um, uh, the reinvestment essentially requirement is to make sure that the proceeds from the original property is going to the other property. So, what does that mean? That means that those gains, you made $300,000, you paid off the bank, the original cost of the property. That doesn't mean you can't walk away with a few grand in your pocket, right? So you purchased the property for 250,000. Over the years, you paid down the loan and everything like that. You have $100,000 left on the loan. Cool, which is fine. But you have $100,000 left on the loan. Now you have to pay off the rest of the loan, and you still have that $150,000 that you essentially originally invested into the property. Now you depreciated over the years, whatever, but they're not gonna, count that against you because that's money that you essentially put into the property. But that equity in the property, those gains, that extra, now that you gain, your property is worth 500,000 and you purchase it for 250, that additional 250, now that 250 you have to put the proceeds, like I said, the proceeds, that's after you're paying. Maybe you have to get the property ready for sale, maybe you have to pay an attorney, maybe you have to pay your accountant, all those fees and everything, that's outside of the proceeds. So that's deducted from the proceeds. You don't have to count that as proceeds. If you have equity of 250,000, but you had 30,000 worth of expenses to get the property ready to sell, then that's okay. That's not counting towards the proceeds. All right. But you do want to make sure that you're using the proceeds from the sale, that gain outside of the expenses, towards the other property. Okay. Huge, huge, huge. And like I said, you can have multiple properties, identify more than one property as an exchange property. So if you have 3 properties that you're looking at, you can identify each of those 3 properties as a potential replacement. It just can't exceed more than 200% of the property that was actually sold. So if the property that you're selling is for $500,000, you can't say, "Oh, my replacement property is $5 million." They're gonna be like, "Hold up," you know. But we want to make sure that you're within the 200% value of the property that's being sold, and that's how you identify the replacement property. Exchanges between related parties. So if grandma had a property and you're selling your property to purchase grandma's property, they're like, "Hold up. Now you're not going to pull a fast one on us." Okay. So you can't do the 1031 exchange for grandma's property and your property and do that like switcheroo. You can't say, "Oh, Cuzzo got a property," and I'm gonna switch out the properties. So related property parties, if you're related to that person, um, then um, then it becomes a very there's a very finicky. Okay. Um, yeah, you can't just say, "Oh, I'm gonna do the 1031 exchange, get grandma's property, sell it, do it all over again, so I don't have to pay the capital gains on it." Um, so yeah. Also, state taxes. If you're in a state that has state taxes, Florida, we good. But if you're in a state that has state taxes, doing the 1031 exchange does not take away from your state taxes. So you still do have to pay state taxes, report the state, the capital gains to your state and pay taxes on that. Now, some states do allow you to also employ the 1031 exchange and do the deferral on the taxes as well, the capital gains as well. But quite a few states don't allow it. So it really depends on your state. And that's why you want to make sure that you have a knowledgeable tax professional that to assist you with navigating that, especially if you're in a state that collects taxes, state taxes. Okay, huge. Let me make sure. I have a question. I will join by June 31st. The IRS seems to think I owe 50K. Okay, yeah, definitely reach out. If this is from a previous year older than 2020, then you can't get a refund if you overpaid. But if there's like some changes that need to be made, things like that, we can try to get the bill down, and then even work on a offer and compromise, try to work on a installment agreement, things like that, as well as if it's from 2021, you only have sometime this month or maybe next month. Sometime this month and next month is the cutoff for 2021. So, because you could only do a 3-year look back. So after 3 years, as far as requesting a refund, you could only request a refund for 3 years. After 3 years, the IRS says, "Oh, you forfeit the refund. It's our money now." But yeah, essentially. But yeah, definitely reach out. Yes. Oh, I know you all will find a solution. Absolutely. Yes, reach out. Gotcha. All right. Questions on the 1031 exchange? I know I went over quite a bit. Oh, yeah, it's hot. It's hot out. But this is, like I said, a great strategy. Grab the book, the real estate book that I came out with. You can get it off of Amazon. Your wealth of knowledge, and I'm glad that you are doing this. Thank you. I appreciate the feedback. I appreciate it. If there's any topics or things like that y'all want us to touch on, feel free to, let us know. Let me know. My team also oversees my DMs. So if you're sending me a DM, they'll see it. If I don't see it, they'll make sure that you're responded to. Just to make sure that DMs don't get left behind. No DMs are fine. But yes, reach out. All right, but yes, huge tax strategy. Like I said again, y'all, make sure that you're reaching out to your tax professional ahead of time before you make these huge life decisions, before you go and you purchase these huge assets, before you're like, oh, I'm going to go get a car loan, and you didn't even speak to your financial advisor. You don't have a financial advisor, reach out. I have a great connection for you. Before you're like, oh, even with whatever the case may be. I received this question. Someone asked me, they're like, hey, when I heard that you have to talk to your accountant throughout the year, but I don't necessarily know what else I need to speak to my accountant about. And I'm like, hey, speak to your accountant about your life decisions, things that you have going on, the fundamentals of having a good foundation to your business. That was the downfall to my businesses. Oh my gosh, huge. Yes. Crazy that you said this. Finances is the number one reason why businesses fail. Okay? Because you don't have your finances in order, y'all. And at the end of the day, accountants are here for a reason, okay? We are here to help you manage your money. We are here to help you manage your finances for your businesses so that you don't have to go and and have to worry about that side of the business, manage that side of the business, and worry about the operations. So yes, should you be involved in the finances of the business? Absolutely, you need to. It's your business, it's your money. You need to know what's going on. But as far as managing it, maybe doing the bookkeeping, coming up with additional strategies, things like that, you need a team. We can't do this alone. And a lot of businesses fail because they want to wear all the hats, and they start generating money, and they continue to wear all the hats because they're spinning out the game because they got some change in their pocket. So, get a team. I know it could be challenging getting a team that's actually, especially in this day and age, you maybe have people that's promoting services and different things, and they're not really knowledgeable, especially with the social media age. But talk to colleagues, things like that. Reach out. We're here. I'm here. Send me a direct message, whatever the case may be. Use me as a resource, y'all. I don't get paid for going live. I love this stuff. I really do. Okay, I could go off and talk about this all day. Because I genuinely want to make sure that y'all are educated about this stuff. This is huge. We do have so many videos, probably over 100 at this point on the YouTube channel. But yeah, tap in, y'all. Let me know if y'all have any questions moving forward. I'm gonna let y'all go and have a wonderful, amazing Tuesday, and join me next week at 6 p.m. for another topic on Sipping Wealth Live. All right, y'all. Have a great day or night.